Hello everybody and welcome to today's video. Today I want to do a stock analysis of Nubank Holdings. So Nubank Holdings is a company that I've heard for a while. It's actually one of the largest banks in Latin America per active customers. It's the sixth largest bank now. So it's really known explosive growth because it's a fintech. It's been able to grow fast because it's a fintech. And it's a fintech that's been backed by Warren Buffett. And therefore, it's got a special place in the investment world because Warren Buffett is behind it. So what makes Nubank special? Well, because it's a fintech, it has a very popular app. And because customers deal with the app and not with the branches, they tend to be much more satisfied with Nubank's offering than other offerings. And it also allows the bank to grow very, very fast. Another classic aspect of the playbook of most fintechs is that they are much more agile than banks. They have much fewer employees than banks, and so they can introduce new products all the time and make the service more compelling every year after year. The service gets more and more compelling because they're able to roll out new products constantly. And Nubank follows really the classic fintech playbook, which is you build a great app and you grow through the app as opposed to having a network of branches and having sign-up offers offering $300 or $400 for signing up with a bank account at the local branch. No, what they do is they have an app, and you sign up for the app, you get $10, you have the lowest customer acquisition cost ever, right, compared to any other banks, and you acquire customers like that through a very useful app and not a network of branches, which is kind of a new way banks grow and is the way fintech grows. And of course, this is helpful because as cash is slowly going away around the world, the branches are not needed anymore. And really a good user experience, i.e. a good app, can replace the banker. And that's the investment thesis behind so many of these fintechs, be it Nubank in Latin America, but also in the US, SoFi or Cash App. So what's the mega trend here? Well, it's a fintech, right? Less expensive to operate. Because they're much less expensive to operate, they don't have branches, they can offer much better costs, so the product becomes so much more compelling and customers are rushing to switch to fintechs. That's one megatrend. And another megatrend, I would argue, is Latin American growth. Latin America is arguably one of the faster growing emerging parts of the world, and it's growing from a fairly large base. So it's a very interesting market. It's a large market. And it's a market that is becoming more and more investable, and so that makes this company special. It has a few good things going for it. Let me just focus on the market, just talking about the size of that market. So we're talking about a market larger than the US, and they're only in 3 countries, but they cover 60% of Latin America, with Mexico 128 million, Colombia 51 million people, and Brazil 215 million people. So this company's addressable market right off the bat is bigger than the US by quite a bit. So that's a big market, and these are growing emerging economies. They have a higher growth rate than the US does, and thus it's very interesting as an investment. But they follow a very similar playbook to any fintech. If you're familiar with fintech, you realize that this is not too far away from the numbers for Cash App, actually. They have 70 million customers, 70 million customers. So it's tremendous. And of course, this customer, the average account size, the average age, all of the stats that when you look at these accounts is not as good as the legacy banks, obviously. But that's the key behind a fintech, is you get a customer while they're in their early 20s, while they're young, before they actually start their earning power, right? Before they actually start earning a lot of money. So that's essentially how fintechs grow, and they've been doing so well at gaining new customers and really growing that customer base. And of course, today the market is valuing companies mostly on profits, and the market doesn't really care about the future. So that's why the talk has tanked so much, because right now it's all about the next quarter, and this company is a growth-focused company. But think about that: 70 million users, and it's been growing at a steady pace. Where will this company be in 2 or 3 years from now? Will it be 150 million users? Imagine how insanely valuable that will be. But because with that customer growth and the ability to grow customers so fast, what that does is that leads to cross-selling opportunities. That's why this type of fintech tends to invest heavily in their app to make the product more and more compelling, because they hope to cross-sell. And you can see that Nubank has done a very, very good job at cross-selling products. So they have customers, they have accounts for businesses, they have credit cards, they have an investment account, personal loan services, account for small and medium-sized businesses, crypto services, and insurance services. And these offerings will grow, right? I mean, if they follow the same playbook as, say, a SoFi, you can assume that maybe in a few years they'll have options. Maybe they have career coaching, etc., etc. They could have so many different offerings, and that is because these fintechs are so agile. They're able to move much faster than a traditional bank, much faster. And what is the business model? They put this in their investor presentation. I thought it was a very interesting chart. So really the most important metric right now is growing the customer base, right? How many active customers do you have? They have 70 million right now. That's huge. That's absolutely huge. So once you grow your customer base, then you start to cross-sell. So you sell more products, and your average revenue per customer, per user, right? That's very kind of ARPU for more software type companies. Your monthly revenue per user grows as your users use more and more products that are offered through the app, and those products are compelling because the app is digitally native, etc., etc. And obviously, because you have an app, because you don't have a network of branches and advisors, then ATMs that cost a fortune, because you have just an app, you have a low-cost operating platform. Right, so you can strive to create the best version of one product and replicate it across all countries in your region. And when you do this calculation right there, obviously, you have your earnings power for the bank. So it's a classic model of disruption, and fintech is attempting to do that across the world. And this is the number one player in Latin America. This is the main player doing that in Latin America. So if you want exposure to that market, that's the big company to buy, and not investment advice. So anyways, it's been impressive. This company has had impressive growth over the past 5 quarters. If you look at the growth, the year-over-year growth has been 171% in revenue. That's very, very impressive. That's perhaps among the top 2 or top 3 highest growth I've seen in all of the companies I've covered on the channel. But what I don't like as much is when I look at the analyst estimates for next year for growth, they are in the 50-ish% range. And if I do quarter over quarter, really we're at 62% annualized rate. So there's a lot, it's not that many, but there's a few companies that I follow on this channel that have about 50%, 60% growth. And so it would be unrealistic, I believe, to expect 150%, 170% growth to go forward for another year or 2. I mean, they're already really, really big, right? They already have 70 million people. They're not going to double the number of customers every year. It's not possible. So growth should slow down quite a bit. But that's okay, because then they can grow products, right? They can cross-sell. Once you have active users, then you can grow your marketing and try to cross-sell more and grow your revenues beyond just new users. Let me talk about a little bit about the headwinds. I think the opportunity is well understood, but what are some of the headwinds? Well, just like in the US, just like anywhere in the world, legacy banks are not standing still. Legacy banks are doing everything to keep their customers, to keep their business, right? So that's That's an important deal right here. You are competing with legacy. I happen to believe that fintech will probably do much better than legacy, and will probably win over the next wave of customers, the next generations. I think they will see it as obvious that money is digital, as obvious that cash is going away. Gen Z and under, to me, it's pretty obvious that over time, to me, fintechs are going to be the way to go. But nonetheless, right now, in the current market that is short-term oriented, these competing banks, these legacy banks, have a real competition. And then they also have their own fintechs. And so the two main competitors that I found for Nubank are PicPay and Banco Inter, and they pretty much try to do the same thing. Although Nubank has a wider breadth of offering, more offerings, and they have more customers, obviously. And so the brand is better. You could also argue they were advertising for the World Cup, for example. They tend to have a pretty good brand. Concentration. Well, I mean, that's why you would invest in Latin America only. You would want exposure, but that's also concentration, right? You're exposed to Latin America. Is this something one wants for their portfolio? Is this something you already have in your portfolio? So that's a little bit of a concentration. Like I said, you have to follow the economy in Latin America. And first of all, is it uniform, right? Is Mexico doing as well as Brazil, or is one doing better than the other, etc.? So concentration is definitely there. It's country concentration. Customer retention. So the best proxy I have for this is Net Promoter Score. The Net Promoter Score is 52, which is fairly high. I mean, it's pretty good. I mean, typically I love anything above 60. It's pretty close to 60. I think what's more compelling to look at when you look at their NPS is the delta between their Net Promoter Score and their competitors. And if you look at this chart that they gave here, they are on average twice as good as other fintech, and sometimes as much as 4 times as good as incumbent banks. And actually, if you read the story of Nubank, it was created by a founder who was upset by how hard it was to deal with incumbent banks. And so his company is getting ranked as 4x better as far as customer experience goes, compared to legacy banks. So that's pretty impressive. Customers are happy with these services. These services really create a lot of value. I would argue they have a lot of short-term macro sensitivity, because obviously as the economy sours around the world, you may have more defaults. So you have macro sensitivity. But next slide, I'll quickly talk about what higher interest rates mean for bank. It's a double-edged sword for a bank to have higher interest rate. The growth runway, well, it's huge, right? If, over one generation or 2 generations, if they take over and replace legacy finance, which I believe is what most of these fintechs are after, that's a tremendous runway. And also, when you deal with a more emerging type market, you have induced demand, right? And even in the US, actually, you have some induced demand with fintech. You always have a share of a population that is unbanked, and I would assume that the share of a population that is unbanked is much larger in Latin America. And so that will create new demand for Nubank, right? People who have never had a bank account all of a sudden can get one because it's accessible with a smartphone, right? And you remove a lot of the hurdles. Acquisitions, they've done smaller acquisitions. I could find 6 acquisitions that Nubank did, but they're all smaller, so I'm okay with that. And lastly, sales and marketing spend and operating expenses. So this is what they put out there. Banks are obviously a little different in that they don't treat R&D the same, but I do like to see 2 things. First of all, their operating expenses are going down, right? 51% of revenue in 2021. This quarter, 32%. So that's a good thing. The operating expenses are trending down, as shown right there, right? Low cost operating platform. That's part of their goal. Increase revenue on one hand, remove operating costs on the other hand. So they're doing fairly okay. They're doing fairly well. And I like to see that the marketing spend relative to the other sections is fairly small, which means that they don't waste a lot of money on marketing. And if they were to have problems with revenue growth, they could invest in marketing and pull that lever. So I find the expenses in marketing, even though it's going up a little bit, I find the expenses in marketing to be very reasonable. Okay, let me move on. So what else do I see? Any near-term bankruptcy? No. The company is profitable. The company just became profitable, which is wonderful. So we don't have that risk. Well, you always have that risk, especially if you're a bank. But I don't think that risk is a concern right now. Company is not going to go bankrupt. Not investment advice, of course. But if you do on an adjusted basis, so removing stock-based compensation, which is not a cash expense, they have $63 million in net income in Q3 2022. And so the question is, how fast is that net income going to grow, right? How fast? Analysts, I would argue, are pretty positive about that. It's going to grow fairly fast. The gross profit margin is 33%. That's low for the type of companies that I look at, but then it's a bank. Banks are different. What I do not like to see, of course, is that profit margin declined compared to last quarter. Profit margin in the last quarter went from 47% to 33%. So that's a pretty steep decline in gross profit margin, and that's due to two things. One thing is credit loss allowance. The economy is beginning to enter a recession around the world, and so banks are putting some allowance aside in case people don't pay off their loans, and that could be a cost, right? That could be a major hit for the bank. And so the question is, did they calculate that properly or not, right? If they calculated it wrong, it could be worse. Gross margin could go even lower, and they have to pay a higher rate on deposits, right? Interest rates are going up, but this is a double-edged sword in that over the short run, the negative impact of higher interest rates tends to be immediate because you have to pay more interest, right? Right away. But over the long run, it actually could be good for revenue because you earn more money as you charge interest on your loans. So I would argue over the long run, interest rates are fairly neutral for banks, but over the short run, this is maybe not a good thing. And we know the market right now is extremely, extremely short-sighted. So is this a stock that could go down more? Not investment advice, but I would argue that it could. The forward PE is a 44, according to Finviz. It was tough for me to find estimates going forward for this company. I found them all over the place, but it's high. It's high. Forward P of 44, I would believe, is high in light of the risks and in light of all of the deals that you can get in the market right now on so many innovative companies. I would argue it's a little high. Long-term debt is great, very low. And then the short-term debt is high, but they have a lot of ongoing financing going on. And so for banks, it works a little bit differently. Overall, I would not be worried about debt unless, of course, we see credit losses. And they've put a little bit of allowance. And so we'll have to see how bad the recession gets in Latin America. All right, dilution. Now talking about dilution. Again, from what I saw, so they had huge dilution in 2020. But that was a one-time thing. Right now, the dilution has normalized, but still at 3.3% new shares in one quarter. I would argue, over 4 quarters, that can be a little bit, right? You could get near 15%, in new shares in one quarter. So I would argue the dilution is a little. Just a little too high for my taste, and I'm typically very lenient with dilution. Like I tend to think, and dilution under 10%, I tend to think is okay because it saves cash for the company. That's where I kind of think differently on this one. Some investors really hate dilution. I'm okay with a little bit of dilution, but this, even for me, I think is a little high on the dilution. Company is founder-led, 10 out of 10. This is great story of a founder, and insider ownership is fine. It's pretty high. It's pretty high. So I like that. Oh, revenue per employee. Lastly, absolutely love revenue per employee. This is a company whose employees are very productive, and so this is a green flag. And so in conclusion, well, first of all, let's look quickly at the stock price. So down 69%, right? I would argue it's not great, but it's not bad either, when you see how bad some stocks have been battered. I mean, it's in line with Tesla. It dropped as much as Tesla. So really, really, I mean, it's a terrible performance, but relative to innovation, it's in line. It's in line with what innovation has performed. I mean, it's tough to read anything about how the business is doing based on the stock price movement here, because to me this is a movement that's all macro induced here. So my conclusion, what is my conclusion on Nubank? Well, I will not be buying Nubank. I could see how this company can become huge, really large company. I believe in fintech. I believe fintech is the future. But I have my own idiosyncratic reasons as to why I would not buy Nubank at this point. First of all, I have a position in StoneCo, which is also, I think, a very interesting company. But my exposure to Brazil is pretty much covered by my exposition to StoneCo and to Mercado Libre. Mercado Libre, which has a Pago division, which is also pretty high. So I would argue my exposure to this market is fine, and I don't want more exposure in my portfolio. As far as fintech and banks go, I have exposure to Square and Cash App, as well as SoFi in the US. So I also am happy with exposure to the sector that I have here. And also I have a dLocal, right? dLocal does a lot of business. It's a different way of doing business, right? They do payment processing, which is a little bit different. But that's one of the reasons why I don't want to increase my exposure to Latin America stocks or to Latin American fintech at the moment. It should not be read as a lack of endorsement or an endorsement in the company, not investment advice. Everybody does whatever they want. But that's the reason. And also, I do not wish to experience my exposure because I've noticed that a lot of Latin American stocks have come under attack from short sellers. And that happened to dLocal recently. And even though the short seller, in the case of dLocal, is probably wrong, it still hurts the stock when you have a short seller, Muddy Waters, who issues a warning, right? I mean, I had another video about that. So I would hate to have another company with another short seller report, knowing that I know that a lot of Latin American companies are a target for short seller reports right now. And lastly, I don't know enough about the current state of Latin America and the economy, and so I don't know what the delinquencies are going to be. I remember Stone, when I was buying StoneCo, the stock crashed prior to all of the macro madness, and that was because of delinquencies and collateral and issue estimating the collateral. Is this something that can happen to Nubank? I don't know. And since I don't know, I have higher uncertainty, and there are stocks that where I have much higher uncertainty, and therefore I have to stay out. If you know more about Nubank, I appreciate anything you can put in the comments. And this is it for my video. Thank you so much for watching. This was not investment advice. This is just entertainment. Thank you for your support. Don't forget to like and subscribe, and you can also follow me on Twitter. Thank you very much, and have a wonderful day. Thank you.